Gold and silver are hitting all-time highs. Silver closed at over $100 an ounce today, and gold is close to $5,000 an ounce. This is causing me to have some internal psychological conflicts about what to do with my gold and silver bullion, primarily gold and silver eagles that are stored in my safe deposit boxes at a bank. And I also own some vintage U.S. gold coins minted in the 19th century that I started to acquire when I was 13 years old, and the price of gold was at $35 an ounce. I have several ways to relieve that psychological tension that keeps me from selling the gold and silver bullion that I own, such as selling a bullion ETF or pairing a mutual fund that maintains close to a 25% allocation to gold and silver, which I did do today in order to stop myself from going to the bank and removing some of the bullion coins to sell. I last sold some gold and silver in September 2011 and January 2012, and have snapshots of those sales in my blog post that was dated in, I think, September 15, 2011, and maybe sometime in January 2012. The post can be found. Owned gold and silver, and have always owned gold and silver. Sole reason is as an alternative store of value to the US dollar, which is the currency used to value most of my assets, although I do have positions in other currencies as well. Ask myself why this is happening. I've been asking myself that same question most of 2025. There are several possible reasons, and there are the normal reasons: short covering, greed, speculation, and so on. But I am starting to focus more on another issue. I addressed in a comment published to my last blog post today, and the reason that I suspect that is driving the prices higher. And later today, I saw a column written by Mark Hulbert and published at Market Watch, which is a subscription publication, this afternoon, titled, quote, "Why Gold is the Only Go-To Safe Haven from Global Turmoil, Not Bitcoin or Bonds," end quote. I've been voicing a similar opinion in several recent videos and blog posts, noting in particular that Bitcoin remains in a bear market as gold and silver have surged. And while noting that that is in fact happening and has happened, I have to ask myself why it is happening. One reason, in my opinion, for the parabolic rise in gold and silver is that investors worldwide, and that excludes Trump supporters here in the United States, are losing confidence in the U.S. government and are sick and tired at the constant stream of threats directed at them by the U.S. president, trying to coerce them to do things that he wants them to do. They listened to him at Davos making threats, rambling about his claim that the 2020 election was stolen from him ad nauseum, disparaging constantly European countries and leaders, insulting them, and even disparaging soldiers from NATO countries, including Denmark, that have died in support of the U.S. mission and war in Afghanistan after the U.S. was attacked by terrorists that had been given sanctuary in that country. While Republicans believe that some meaningful progress is being made on the budget deficits by their leader, Trump, slashing payrolls federal government payrolls by 300,000 or so and eliminating what are small programs in the scheme of things that they do not like, is happening while they are drastically increasing the budgets for Homeland Security and Defense. The U.S. government debt will soon surpass $39 trillion and will continue to rise parabolically and rapidly. The Committee for a Responsible Federal Budget estimates that the federal government deficit spending will be $1.7 trillion in 2025. That's for the calendar year 2025. And that is with the massive tariff revenues that have been collected that may have to be refunded, that the Supreme Court finds that Trump acted illegally. Last year, the federal government spent $970 billion in interest, and that sum will go over $1 trillion this year. The entire debt of the United States was less than $1 trillion in 1981. So how does Trump respond to the concerns being expressed about foreign countries and foreign owners of U.S. treasuries possibly selling or reducing their holdings? Well, he responded by threatening them with retaliation if they sell. He says that he governs in the United States and the world, and those outside of the United States do not want to be told what to do by one person in the United States that they have zero respect for and hold in disregard. As one Danish pension fund recently stated that they were going to eliminate their holdings of U.S. treasuries, that was about $100 million. Most entities that own U.S. treasuries, if they decide to reduce their holdings, will do so quietly and without any fanfare. And that would also be the case for any foreign country that owns U.S. treasuries as well. The Treasury, with the budget deficits running as high as they are with no end in sight, and the debt is as high as it is, and with interest payments moving up tremendously every year, the Treasury needs everybody in the world to be willing buyers and enthusiastic buyers of Treasury to fund the debt. Otherwise, we're going to hit a brick wall going 100 miles an hour, and it's going to be a failed Treasury auction, multiple failed Treasury auctions. So the Treasury publishes data about foreign owners of treasuries by country, and these will mostly be, foreign pension funds, foreign institutions, foreign individuals, and some in foreign government entities. The last data is from November 2025, and entities located in China owned $682.6 billion in treasuries as of November 2025, and that is down from $760.8 billion in January 2025. All you have to do is check the data. It's online. The Fed has resumed buying treasuries, taking its balance sheet back toward $7 trillion, but I'm not comforted much by the fact that the Fed has been a major buyer of debt issued by the U.S. Treasury. Those purchases are now being funded by proceeds from maturing treasuries and mortgage-backed securities that the Fed owns. But the funding for the Fed bloated balance sheet that went over $9 trillion in 2022 originated from the Fed creating money to buy those securities, which increased the money supply by over 40% in slightly more than 2 years, ending in March 2022. And that was welcomed by metal investors, precious metal investors, gold and silver, since it was a major debasement of the United States dollar. M2, the money supply, is starting to move back up again and is currently about $500 billion higher than the high point from March of 2022. And the first year of Donald Trump's second term has been a bonanza for precious metal investors. GLD, the gold ETF, was up 63.68% in 2025 and is again moving much higher in 2026. SLV, the silver ETF, was up 144.66% last year in 2025 and is up almost 40% this year. You can check the data that I just gave you by going to the Morningstar website, and this is accessible by non-subscribers. Enter the symbol and click the Performance tab. Ask yourself why this is happening. What has changed in January 2025? The Republicans say he is making America great again, but that is not what gold and silver prices are signaling, not in the least.